All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live. It is Monday, June 1st. Thank you, everybody, for being here. And, folks, we got a green day. We have a green day, and there's a lot of different things to analyze in the context of this green that we are getting. There's also some headlines that are making it a little confusing to see why we are so green, but I don't think any of us really are complaining about it too much because it's a pretty damn green day. ServiceNow, 9.7%. ARM, 15%. Nebius, 14% on the day. S&P 500 has hit a new all-time high. IREN, it was down on the day. Now it's up 1.5%. Oracle, up 10%. Oracle touched 250, just below it. Incredible stock, has made a massive move from the software and data center perspectives. That is green. Nokia fell to below 15 last week, now up 10%. IBM, that's up 7%. Vertiv, that's up 2%. NVIDIA, 224. Whoever bought that 212 dip on Friday, this has got to be the easiest money you've ever made on NVIDIA. 223, that's up 5.79% on the day. Microsoft up 2.5. I mean, it's been a pretty damn good day. It's been a pretty damn good day. Now, if you're in space, a little bit of an ugly day. Rocket Lab taking a breather, down 13%. ASTS taking a breather as well, down about 6%. So space stocks getting a bit hit. Not that crazy to see them consolidating right here. Redwire up down 15%. If you have these 15, 20% green days, you're going to have some of the red days as well. But nonetheless, that's hurting a bit of the market. Cerebras, not the best day for some of the semiconductor names, down about 9%. Micron, all-time highs. That one's up 1,031. You had ARM, which had a great day. Intel and AMD, unfortunately, not the best day. Intel right there down about 5%. AMD down 1%, nothing too crazy. Again, those announcements from NVIDIA on the CPU side is what got the market to be a little bit afraid of a couple of those names. But at its core, it's been a decent day. Even Robinhood, which started off down 10% of the day, only is now down about 3% at 91. You got your SoFi's right here at 1862. That's up about 2.7%. Keel getting a bit of a breakout in the neo cloud space. You're seeing a lot of these names. CoreWeave, massive day, 13%. Still doing okay. What is the most surprising about the run that we are having today and the rally and momentum is the fact that we still don't have a lot of stuff resolved from a geopolitical perspective. Oil's up 5% on the day. Market doesn't care. The big headline this morning, if you missed the market open, was that Iran came out and said, because of Israel's actions in southern Lebanon, we will not be negotiating anymore with the United States. Trump ended up tweeting about it. You can tell this guy wants to get a deal done. He tweeted a couple hours ago, I had a very productive call with Prime Minister Netanyahu from Israel, and there will be no troops going to Beirut, and any troops that are on their way have already been turned back. Likewise, through highly placed representatives, I had a very good call with Hezbollah, and they agreed that the shooting will stop, that Israel will not attack them, and that they will not attack Israel. Then you had Netanyahu put out a tweet. I spoke this evening with President Trump and told him that if Hezbollah does not cease attacking our cities and citizens, Israel will strike terror targets in Beirut. This is our firm position. At the same time, the IDF will continue to operate as planned in southern Lebanon. So there's a bit of confusion here in terms of what exactly is going on. Did Trump actually talk to Netanyahu and get this to be resolved? And we don't have as big of a concern in regards to Lebanon to worry about. Or is Israel saying, look, we had a conversation. We can have a conversation if he wants to have a conversation, but at the end of the day, we're still going to do whatever we want. And until we see progress from our side, we are not going to stop. I don't know. And I don't think the market knows either, which is why oil's up 6%. But the stock market doesn't care. And as a result, you've seen just massive moves. Zeta, crazy day, up 11%. ServiceNow, again, up 9%. CoreWeave up 13%. Various different sectors participating in this rally in the midst of oil being as high as it is. And I want to say that's bullish because at the end of the day, if the market's ignoring this, then maybe the market's ready to move on from it, just pricing it, looking forward. The market has done that for the past month now. So a little headline of spiking oil 5%, even though it's down a lot from where it was historically over the past 2 months, probably is not going to get the market to falter. But nonetheless, you've got the dip buyers that are in full swing and they are not slowing down. Oscar right there, 23.22, that's up 4.5%. The photonic stocks came back today. They were all down at the market open. AAOI up 18% on the day. Lumentum was down 3%. Now it's up 5%. Just a massive swing with a lot of those names. The two stocks in the Max 7 that took an ugly beating, Meta and Tesla. I bought more Meta today. I think this is the screaming buy of 2026. I would love it to go to 550s. And when I say that, like, I have enough Meta where it would hurt me if it goes to 550, but I also, like, at this point, I think we've just been seeing over the past couple of weeks, eventually stocks that have good fundamentals will be rewarded if there's not a thesis that is broken. There was no thesis broken with Shopify, no thesis broken with Zeta, no thesis broken with SoFi, Reddit, no thesis broken with Micron. All these names were fundamentally strong. The market just wasn't a hissy fit. So if the market wants to be a hissy fit, then okay, be in a hissy fit. Now, Google, I understand that consolidating a little bit because Google's had a massive run. Microsoft didn't really get the breakout people wanted today. 2% is not, 2% is not what people were looking for. So Microsoft, once again, kind of underperforming the real. I mean, people thought this thing was going to 480, 490 today. 460 still decent. And then Amazon, I think all your Mag 7s are actually taking a breather. Amazon right there down 3%. So it's not Meta alone. It's just Meta has underperformed so much this year that, they look the worst as they're going through this pain. Nonetheless, I think these names are going to be okay. We'll talk more about it after the bell, but overall, hopefully nothing too bad as we see going into the end of the year. Credo and HPE had earnings in the morning, right? Or do they have earnings after the bell? Oh, they do have earnings today. Oh, so we do have companies. Why did I think they were in the morning? Okay, so HPE, Hewlett Packard, that's up 10% before the earnings. And then Credo, which is also a photonics play. They acquired a company for $750 million a couple months ago. That's down 4%. And then Hive. Oh shit, we do have a lot of earnings. Okay, so these three companies, these are what we're going to have today. And so we'll take a look at that after the bell, and then we'll get to the headlines. Nebius getting a little bit of dump into the close. Again, massive day, 14%, 273 to 263. You're obviously getting a lot of people that are incredibly bullish Nebius. Our boy Nate pretty much liquidated everything in his 4 accounts today, and he basically went all in Nebius. So, I mean, you're just seeing people say, you know what? Enough is enough. This is the best buy over the coming 12 months. At least that's what our boy Nate believes. He's been an early advocate of Nebius since 60. And he's all in. And I didn't see other people literally go all in today, but I'm seeing a lot more excitement around Nebius and CoreWeave in particular, the NeoClouds, getting more of the idea that these are $100 billion companies. I asked Jose this morning, should these companies go to $100 billion? And he said, if the compute constraints continue to exist, they probably will. And so you're seeing a lot more excitement right there for them. Nebius also had a partnership with France today. That was announced. Emmanuel Macron tweeted that Nebius chose France. The AI cloud player unveiled a project exceeding 8 billion euros in investment to deploy cloud infrastructure and services with a target capacity of 240 megawatts, positioning the site among the continent's most powerful. Here's the thing. If a gigawatt is going to cost $80 to $100 billion in the future, which is what Jensen is saying, and Nebius already has 3.5 gigawatts contracted and in capacity. I mean, if that ends up doubling over the coming years, you can just imagine the type of revenue, and eventually as their margin scale, they'll be able to bring that down to free cash flow. That is kind of the thesis on these NeoClouds, and ultimately you believe that thesis or you don't if you're more excited for it now. What price did you buy Meta? $615 today. $615. So obviously it is coming down lower. But look, at this point, I really do think, let it go to 550. Give us the dip of the year. I missed it at the 520s. Got a little bit at 590 when it was coming from the 520s back in April. But these are two fundamental companies when it comes to Meta and Microsoft. The narrative changed on Microsoft overnight. Microsoft 350 to 460, even if people aren't happy with the breakout. Meta is one of the top 10 most owned stocks on the planet. It's one of the top 10 stocks that was bought last quarter. If they're going to take it down, take it down. But we've seen what happened with stocks that are taken down and have good fundamentals. Salesforce, 10% on the day. ServiceNow, 10% on the day. Snowflake, after going up 40% last week, another 10% on the day. I mean, it's one of those things where as we're seeing the software rebound, it makes you remember you shouldn't be afraid to buy good companies at a quality discount. There is an opportunity cost, of course. I'm sure Nebius will probably outperform Meta over the next month as, that has way more momentum. But there's also a little bit more risk associated with it. And if you want to mitigate some of that risk by buying things that are fundamentally sound and cheap and depressed in the valuation, then it feels like Meta's a no-brainer. But we'll talk more about that after earnings. NVIDIA right there, that's up 5.75% on the day. Fluence had a partnership with NVIDIA this morning. That's why that stock shot up pretty aggressively, 43% right there. And that was one of their partnerships for rack architecture that gave this one a little bit bigger of a moon. Palantir, not too bad. Palantir is 160, got up to 163, 160.30. Not too crazy. I mean, again, overall, space and a few semis and a few software names were down, but the broad majority of the market had a good day in the midst of some pretty bad headlines with oil. Market seems to kind of not care, and it seems like we are going higher. Another big tailwind for the NeoClouds is that Anthropic officially has filed for IPO.
IPO queue. Pretty much they take the next step here towards an IPO, say that they have confidentially submitted the draft paperwork and it gives them the option to go public. They say it doesn't guarantee that they will go public, but this helps them prepare and be ready. They talk about market conditions and sort of leaving the door open for them to also not list. But of course, the backdrop here is their rival, OpenAI, we have reported, has also been in the same position, has been looking to file confidentially. That is sort of in limbo. But the latest we had heard was that they were looking to file and in the same way confidentially. So we don't see any of the numbers quite yet. But they have been seen as first, that OpenAI was the one to go first. It seems like Anthropic is sprinting here to either get out ahead or at least be on par with where OpenAI is. It also comes as we see SpaceX listing. Finally, last note on Anthropic, we reported just last week that they closed a massive financing. It was $65 billion, $965 billion valuation, almost $1 trillion. And there were questions over, is this it before they go public? Will they tap private markets, public markets? Here's the answer. They're looking to go public, I think sooner than a lot of people thought, Leslie.
Yeah, that is remarkable.
I mean, October, if we see Anthropic, Sam Altman did an interview today, we'll listen to him in a bit as well, and we see SpaceX in June, it's going to be pretty incredible to have those types of multi-trillion-dollar companies, because Anthropic just raised that $965 billion. There's no way they're IPOing for less than $1 trillion, especially the investors who just invested at $965 probably want to see it go above that when they go public. So, I mean, I would imagine Anthropic's going to be probably trying to go for 2. Maybe 1.5, but it's going to get bid up to 2. SpaceX definitely going for 2. And we're going to have a lot of liquidity in the markets, try to go to those companies as they continue to perform and be kind of the most important companies when you think about it from an AI perspective. Tesla right there, 4.4%. Not sure why Tesla went down today. Really, I don't see any headline, but Tesla getting hit. Again, all the Max 7s, Meta, Amazon, Tesla, Google getting hit. NVIDIA really stole the show from the Max 7s today, 224. As that one had a really important event in Taiwan last night. We talked about it. Jensen had a dinner with a bunch of executives in the AI supply chain. One of those executives was the chairman of SK Hynix. So that dinner was last night as Jensen talked more about different issues in their supply chain that they are working on. 306 for Apple, NVIDIA right there, 224.30. For those asking why is Meta down, I don't know. I have no headline for you. Am I buying Meta still? Yes, and I'll be buying it all the way down. The street will re-rate this. It's one of the most important companies on the planet. I don't think you overthink it. Does that mean at 600 it's the best buy? Probably not. Maybe it goes to 580, 570, but I'll have a Substack article on Meta this week. At this point, it warrants really doing a deep dive on the current state of the fundamentals and analyzing all the risks, which there are plenty of them. But I actually don't know why the headline is for why it's down today. Maybe the street didn't like the wearables leak that came out on Friday that Zucks is trying to think of potentially getting into that market, which quite frankly, I don't like that headline either, but I don't know if that's enough of a reason to take this thing down to 15 times forward earnings. So we're gonna have to see how the street ends up thinking of it. Intel right there down about 4.7%. You got Robinhood down about 3.8%. Zeta had a great day, up about 10.4%. Corey 14, Nebius great day. ServiceNow great day. Overall, not too bad. Not too bad. We got a couple earnings after the bell. We'll go through those earnings and then we'll get into some headlines. But not the worst thing. Let me know in the chat if you own Hive, HPE, or Credo. Those are the earnings we got on the bell. Hive, HPE, Credo. We will look into how the street ultimately thinks about them. Monday, June 1st, 4 p.m. The stock market is now closed. All right, we are done for the day. Why is Intel down? Intel's down because of NVIDIA CPU announcements last night. Talked about that in the morning. NVIDIA, pretty big day for NVIDIA. That's about a, hold on, let's do the math on that. That is a $312 billion add in market cap today for NVIDIA, as it was up 6.29%. Lost about $125 billion on Friday on the rebound. So has more than doubled that increase since Friday. And you're seeing a lot of the money rotate into that, potentially some of that leave Intel and AMD. Microsoft right there, 460, up 2.28%. Fluence, massive day, 43%. Palantir, 2.6%. You had Oracle, great day. That was up 9.8% on the day. Google, Tesla, Amazon, Meta were down. Lumentum, that was up 5.8%. ServiceNow was green, 135.87, up about 9.8%. BTC got hit today hard because the crypto enthusiasts did not like strategy selling Bitcoin. They only sold 32 Bitcoins. It was an inconsequential amount of BTC that they sold. I think one theory I read today was that it was done as a test to kind of see how the market would interpret it. Even if, it didn't really matter for the amount of Bitcoin that Saylor has, which is over 800,000. And it looks like the market did not like that Saylor was selling. So was not the happiest with that, but Bitcoin right there, 71,000. Which one outperforms? We have, putting the poll in the chat, HPE, Credo, and then what's the other one? Hive. Hive is a NeoCloud, right? Correct me if I'm wrong. Is it NeoCloud? Hive Technologies, or am I totally misreading it? 2 billion market cap. Let me know in the chat. I'm pretty sure it's a NeoCloud. HPE, do we have a pump? We don't have anything yet. It was up 9% on the day. Yes? Okay, cool. So that's a NeoCloud. Credo, don't have anything yet on that. That was down 4% on the day. And then Hive up just a little bit after the bell. People are rage quitting Bitcoin. Tom Lee did say that this morning. We'll listen to what he has to say about crypto. He continues to be pretty bullish on the crypto ecosystem in general. But, overall, the market is not flowing into it. Maybe that means this is the time to buy when other people are afraid. Okay, Credo don't have their numbers yet. Hive don't have their numbers yet. HPE already pumped today, so I kind of wonder how much of the pump is left. They're going to have to really put up some Dell type of numbers to get this thing to continue to move, but we don't have any of those earnings yet. Wait for those earnings in a second, then we'll keep going from there. GitLab's tomorrow. GitLab's not today. GitLab is tomorrow. And so we will take a look at that. Call options, as we're waiting for earnings, we got a new stat from Goldman. Call option volume is skyrocketing. Call options now reflect 70% of total market volume. Since early April, this percentage is up 25%. This also exceeds the previous brief surge of 68% in late 2025. So this morning, we looked at a macro stat from Bank of America saying that tech inflows for their clients are the highest since October 2025. The call option flow is now the highest since October 2025. October 2025 is also when we put in a short-term top. So we're going to have to keep pushing through to avoid some of that October pain that we had last time, but you are seeing enough excitement and momentum in the market when it comes to calls, tech, etc., for seeing this much green that is now on the way in a lot of these different tech stocks. Okay, Credo, I'm not getting anything. Hive, I'm getting a 2% move. Don't have their numbers yet. HPE. Don't have that yet either. IGV, software ETF, was up 13% in the past 2 days, most since 2001. If that doesn't tell you that SaaS is back, I'm not sure what will. Now, could it have a pullback? Sure, but largest 2-day gain since 2001 means the market is ready, I think, to feel okay with buying software again. Hive right there, up 2.3. Or sorry, yeah, that's Hive. HPE is up 1.7. I don't see the numbers yet. Let me pull up the top 20 stocks traded in the options market today. NVIDIA, Tesla, Microsoft, Apple, Palantir were your top 5. Meta was number 6. Then you had Micron, Oracle, Intel, Nokia, Virgin Galactic, Space made it up there today. SoFi, CoreWeave, ServiceNow, Amazon, Hood, AMD, AMC, which had their highest attendance since 2019, Broadcom, and Netflix. Those were your companies. By the way, is anyone looking at Netflix? Do we think Netflix is going to make a pop before next earnings? I mean, it's kind of sitting at that range it was at last time. So maybe that one's worth taking a look at in this market environment as well. HPE, 12%. There you go. 12% move. HPE, oh boy, that's a big one. That's a big one. On the guide for the fiscal year EPS, Street wanted $2.50. HPE, $3.45. Wow. That's a big beat on the guide. Q2 revenue, Street wanted 9.7. They came in at 10.6. That's a beat. Street wanted 58 cents for the 3Q outlook. They came in at 93 cents. That's a beat by almost double. Adjusted EPS for Q2, Street wanted 53 cents. They came in at 79 cents. That's a beat by 50%. And then adjusted EPS, the Street thought they would do $2.50. They are doing $3.45. This is, I mean, it's kind of reminding me of Dell. It's kind of these are the types of numbers that could, I mean, it already has done half of Dell's gain. Dell was up 40% after hours. HP is 24. My goodness, this market is relentless, bro. absolutely relentless, and sometimes to the downside as well. Credo, down 10%. Credo down 10%. The numbers on Credo double beat. EPS 13%, 116 versus 103. That's a beat. Revenue 437 versus 433. That's a beat by 1%. EPS is up 231% year over year. Revenue's up 157% year over year. Stocks down 10.8%. How much was HPE up going into the print? It was up 94% year to date. So that is being bought into strength. Credo year to date before this 10% decline was up 57%. So I'm not sure you could even say it was priced for perfection. It might be something with the actual earnings itself. Hive don't have their numbers yet. HPE 23%. Credo first quarter revenue guide. Street wanted 460. They're coming in at 475. So that's a beat on the guide. That's a beat on the guide. Street doesn't care. Down 12. Even though, again, it was up 50% going into the print. Hive still waiting on that. Oh, wow. Credo's falling now. It's falling. SMCI, well, SMCI should be pumping if HPE had those types of numbers. See, the issue with SMCI now is they're pumping on other server companies' earnings, but then on their earnings, they tend to never pump. And so it's kind of one of those trades where you got to be careful with how you buy it, because there's tons of catalysts in the server space, but their earnings tend to disappoint. But maybe their earnings won't disappoint this time if HP and Dell and all these other companies are having these types of runs. HP was up 36, now it's up 22. So you did see a quick decline right there at 60 to 57, but still 22% massive move. Is Dell up? Dell after hours was up another 10% during the day, up a little bit after hours, another 1%. Dell, just incredible move on Dell. HPE up 20. You're starting to see some sellers come in. Let's see if you can hold on. Keel's up a little bit after hours. SMCI's up 4, and then Hive still up 1%. Oracle, yeah, potentially that could be a beneficiary after hours as well with these server companies. 248 on Oracle. Why is Okta pumping? Okta is not pumping. It's up 21 cents after hours. Did they have earnings already? I'm pretty sure they had earnings. I think today was delayed reaction from the earnings that they had on Thursday, but all the software names kind of got a pump today, which is why it's up. Yeah, Credo's interesting. I'm not sure why the street's upset. Does anyone understand this company better than me? Which I'm sure the Credo shareholders here are probably like what is the street upset about? They beat on the top, they beat on the bottom, they beat on the guide. You can tell me it was priced for perfection, but HPE was up way more than Credo was year to date, and they also had some pretty good beats. Maybe the extent of the beat wasn't as strong. 14% down here. A little weird. I'm still angry at HP for messing up my printer because I wouldn't subscribe to print. That's hilarious. That is hilarious. Whenever I need to print a piece of paper, I go to the local library at this point because I do not own a printer anymore. Hive is down 0.5%. HPE up 20. Okay, that's getting faded. It was up 36. So we got to see how much momentum this run has right here. But still a pretty freaking good result. Let's see if we can get some more data from HPE. I mean, again, if Jensen's saying 100 billion per gigawatt, the amount of capex is going to literally double from here because a gigawatt right now is 30 to 50 billion. Jensen's saying 80 to 100. Number two, all these suppliers, whether it's Credo or HPE or Dell or SMCI, I think the reason they keep getting the bid is because the street's like, okay, they're going to have a lot more money to be able to get over the long term. NVIDIA, right, they're up a little bit as well. After hours. Dell, is that one still moving? Dell, yeah, 470. There you go. After hours. What are Credo's margins? That's a good question. Let's see if they have their actual results on their website. Do we have it? Yes, we have it. Okay, Credo, 437 million. That's 157% year-over-year growth on revenue. GAAP gross margins of 68.2%. That's not horrible. Net income 169 million. CEO says fiscal year 2026 marked another defining year for Credo. For the year, revenue more than tripled to 1.3 billion. GAAP net income is up 100, or non-GAAP net income up 500%. Credo expects to achieve continued strong financial performance with our innovative and vertically integrated approach that enables customers to accelerate their cluster time to stability, maximize GPU utilization, and improve network reliability. Guide on the revenue, 475, better than expected. The GAAP gross margins, the street wanted 69. They're saying we might do 68.9. Maybe the stock's down 15% on that 0.1 miss. GAAP operating expenses, 171. Street expected 90 million. So they're up a little bit on the expenses for the guide, but that's not enough to take it down 12%. HPE, are we still holding? Still holding 22. Still holding 22. HPE, if I'm not wrong, let me pull up their results right here, because they have a variety of different elements to how they're competing in AI. Okay, have their numbers as well. CEO, we drove high profitability and cash generation this quarter through continued operational discipline as well as executing ahead of schedule against Juniper Networks. Based on our performance, we are raising our fiscal 2026 guide and introducing a fiscal 2027 financial growth framework. Revenue up 40% year over year, 10.7 billion. Free cash flow, 900 million. That's up by 2 billion year over year. Networking revenue, 2.7 billion. Cloud and AI revenue up 7.7 billion here, almost 23% year over year growth. Networking up 148%. So you have networking and then cloud and AI revenue that are growing pretty substantially. Networking 148% year over year. I think that's why the street's happy. 25% right there. That's also why SMCI is getting that bid as well. Astera Labs, is that down on this? A-Lab. Oof. That actually makes sense if Credo's down. Okay. This actually reminds me of last time Credo had earnings, or last time they bought that photonics company. Astera went up with them after hours. So Credo and Astera both taking a hit. Schneider says I'm up 30% on my HPE purchase today. It's that type of market. It is that type of market where, dude, someone posted a screenshot today of buying, what was it? It was like, they were up $1 million because they bought, I don't know, like how many thousands of shares of Nebius at like 230 or something. The Nebius went up 18%. They put like 5 million into it. Nebius went up, 20%, and then boom, they were up. It's pretty incredible, this market, but there's a lot of capital that's ready to flow in, and that's why these stocks continue to catch a bid.
Ahead of its fiscal 2028 long-term financial plan. So let's start with the numbers. And blowing past, look at the shares are up 20%. EPS came in at 79 cents adjusted, nearly 50% above the 53-cent estimate and more than double a year ago. Revenue hit a little bit over 10 billion bucks, almost $1 billion above expectations, with the upside coming almost entirely from servers and the server beat. I was able to speak with HPE CEO Antonio Neri about these earnings, who told me traditional server bookings are up triple digits, the biggest backlog the company has ever seen. He said
that's why SMCI and Dell are up. That's why, I mean, the Dell already showed you how big the server business was going to become by raising guidance by 10 billion. HPE is continuing to validate that. SMCI in a couple months probably will do the same, and that's why these stocks continue to run.
AI demand is accelerating, specifically on premise, especially in industries where security matters. That's why they want to do it on prem. On supply, he was a little more direct. Memory still remains constrained. Costs stay elevated well into 2027. And he sees no necessarily memory price decreases on the horizon. HPE is raising full year guidance for a third time in just 6 months. This time, the EPS outlook, earnings per share, is being hiked by $1, which reflects both the big Q2 beat and also bullish performance on the back half of the fiscal year. HPE also raising revenue growth to at least 29%. And that is why you're seeing shares, I had up sharply, but this is soaring almost 24%, guys.
Okay, HPE, they crushed it once again. It's one of those markets where buying into strength on the semiconductor names, for the most part, works. I know with Credo it's not working, but Dell was a signal for HPE. HPE validated that signal. 32% right there, trying to get back above where it popped off at 61.75, and then SMCI 19 to 50. from those lows a month ago. Pretty incredible. Pretty incredible. The fact that Dell is moving after hours on another company's earnings after they were the biggest company in this space when it came to servers is just showing how much money is getting ready to flow into these names. I mean, it is quite incredible. But the money's also coming into software. So I guess my question is, where is the money leaving? Or is net new capital coming into the markets? And based on the money market funds, you're not really seeing that much of an inflow if that's the barometer of fresh capital. Maybe short covering is potentially causing a little bit of that increase as well. But I don't know. You just might see some other sectors taking a breather, potentially like space, to come into other areas. Okay, Hive, I don't have their numbers. Yeah, definitely leaving crypto potentially. Where are the Hive numbers? This is a Canadian company, right? Let me check their website. I don't see it anywhere on X. Sachin, GitLab is tomorrow. GitLab is tomorrow. GitLab is tomorrow after close. GitLab, Palo Alto, and Ulta are tomorrow. So those will not be today. Do I have Hive? I do not have Hive. It's not on their website, folks. Not on their website. I don't know what the street's expecting on this one, but not there. What do you mean by the money's leaving crypto? I mean that crypto assets in general potentially might be used as a source of liquidity to buy semis and AI. And I think and software now. And, that's why crypto is not really catching a bid. I wouldn't say money's leaving space. I know today was an ugly day for space, but if anything, more and more money has come into space. Does Leopold have Hive? Does he own Hive? Does he own Hive? Hold on. I don't. I think he does. Let's see. I think he does. Holdings. He has. Yes, he does. How much does he have? He has 19 million shares of Keel. He has Hut. Oh, he does have Hive. 3.4 million shares. 3.4 million shares. Okay, so he does indeed have Hive. He has Corning as well. He has Corning, NVIDIA, Cypher, Coherent, Hive, Hut. No, sorry, he sold all of his Hut. And then he has 19 million shares of Keel as well. IGV down a little bit after hours. Oracle up a little bit. Still do not have numbers on Hive. Wow, a lot of you guys have Hive. Well, we're following Leo, I guess. Don't have that yet. Amazon, that one up a little bit after hours. Okay, guys, I think those are most of the earnings. Until we get Hive, which I don't know when we're going to get it, but when we do, we'll cover it. That is what we've got right now. What happened to Meta? Meta fell off a cliff, and I hope it keeps falling. Genuinely, let us buy a generational company at a generational valuation and give it to us cheaper. We'll see. But there was no headline for Meta. No headline that I could really tell you, neither for Google or Amazon. But Meta did fall. Credo recovering a little bit, was down 11. HPE still up 30. Still up 30. Hive is pumping. Is it? Okay, we got a 3% move, but again, still do not see the numbers. I mean, if it should be out right now. So if anything, then it should come out very, very soon right here. Put in the chat what moves you made today. If you made any moves, buy, sell, puts, calls, anything crazy. I know CoreWeave. You know what's funny? Like, I was looking at CoreWeave on Saturday, and I was like, dude, CoreWeave's a buy. I was looking at it last night, and I was like, CoreWeave's a buy. And then Jensen did that press conference, and I'm like, okay, CoreWeave obviously was a buy. It's up 13%. But now I'm just like, if CoreWeave's a buy, Nebius is a buy. So all these smaller companies like Keel and Hive and Cypher and Iren, like, I know they're not as high quality as CoreWeave or Nebius, but they've got to be the easier buy right now, right? Like, unless they completely crap the bed, they've got to be easier than CoreWeave and Nebius at these valuations. So I don't know. But I feel like maybe even just as a speculative bet right there, Same thing with the drone stocks. I mean, I know they pumped a lot last week on that Trump funding, but I don't know if the pump is done on these. Kratos in particular looks pretty attractive right here, down about 2% since Friday. But some of these as a spec play maybe end up catching a way bigger bid as the market starts to price in different data. Dell right there still up 1.6% after hours. I see a lot of metas. I see a ton of Zetas. Will Zeta give us a pullback? I think all these software names eventually will give you a pullback. I think Reddit will give you a pullback. Shopify gives you a pullback. I wouldn't FOMO into them, but I also would remember that, look, is it really that much of a FOMO buying Zeta here when it was at 38 not too long ago? And the valuation is more than reasonable at 4 times sales? I don't know. Some of these other names that have gone parabolic, it's bigger FOMO, and you might get hurt on those, but even those have done really well, right? So I think when it comes to the software names, like some of them have made massive moves that are probably not going to reverse entirely, but the idea that Zeta can't go back to 23, 22 is, that could happen tomorrow. It's just a question of your patience on waiting for those. SMCI still up 5.7% after hours. See some Reddits, see some ServiceNows, APLDs, Amazon's, a couple people saying they trimmed some of their NVIDIA. Sold some calls on Micron, sold some calls on DRAM, Nokia, Fluence. Again, big deal with Fluence this morning, and NVIDIA with rack architecture. We talked about that as that continued to make a bigger move. Oh, who bought the dip on space today? Rocket Lab, Redwire. They got smacked today, dude. They got smacked hard. But then again, it's also, they went up so quick, so fast. It's almost like this was kind of inevitable right here. Update on SpaceX. SpaceX reserved 5% of their shares in a planned initial public offering for certain employees and individuals selected by executive offers, exempting them from post-IPO lockup restrictions. The shares will be offered at the IPO price through a directed share program. The company said any reserved shares not purchased through the program would be sold to the general public. So you've got 5% of this $75 billion they're raising that will be liquidity for employees that have been there, I would imagine, for a long time. That we will see on June 12th. What happened to FJet in the last hour of the day? I do not know. This one rallied, you're right at the last hour, 27%. This was one of the space names that caught a bid a while ago. There's no headline on it. Absolutely no headline that I see on this one. Did you see Marvell today? Didn't this one close at 210? Marvell 219. Wow. Yeah, this one, again, delayed reaction from earnings, but made the move. Made the move. HPE still moving after hours, 32%. And Credo still falling after hours by 11%. Okay, so I think that's it for earnings until we get Hive's numbers, which I don't know why they're out right now, or they're not out by now. Again, on their website, don't see anything there. Still don't have it on the website. Once we get it, we'll take a look at it, but as of now, this is what we got. All right, so let's get into some headlines. Let's get into some headlines in terms of what happened today, and then we will kind of keep going from there and seeing what else we have. So first of all, Sam Altman, new interview. Here's what he had to say as his company gets ready for an IPO.
To your point, we obviously don't know the answer. Yeah. I mean, when you introduced, I think it was 5.2, you said it outperforms professionals across 44 occupations. You can understand why there may be an AI backlash when people hear things like that.
Totally. What I wish we had said then is that it outperforms professionals at small tasks in 44 occupations, which is, I think, a more accurate thing. And it is the people that are using these that are now seeing, incredible productivity growth, wage growth, all of the benefits from this. But I think people are right to be anxious, and I understand it. This is not even a technological shift that happens every generation. This is one of the big ones,
and if not one of, maybe
one of the biggest. Yeah. And so it would be imprudent not to have some real caution around that.
On that, on the AI backlash, and I have been speaking with a number of the leaders in the industry who have been saying maybe we haven't done enough to articulate the benefits, which may be difficult to do. But there's not just opposition to data centers like this. There is a more significant, perhaps, opposition to what it's going to do to society. Yeah. How do you feel as the leader, one of certainly the key leaders in this, in terms of your ability to combat that backlash?
Yeah, so it's a huge challenge. And again, as I said, I think this is like, there's something good about this. Like society should have antibodies against too rapid of change. And there should, like, part of the reason that we believe in this strategy of iterative deployment is we want society to see the technology. We want society to really understand what's happening and have a chance to debate, react, sort of say, hey, this doesn't make sense, or this isn't going to work for me. Like, this has got to be, I have no interest in like building a, super smart AI that accomplishes some non-human goals. Like, this has got to be about something that is working for people, and that people are at the center of it, and human values are what we drive forward. So
they're going to need someone who can really sell this IPO, because every time Sam talks, it's like, you kind of want to not invest in OpenAI. So and same with Dario's, they're going to have to find people to really sell this IPO to the street and to retail investors outside of those guys. But the point is, the broader argument he was making is that, AI should be creating anxiety, and we're all trying to figure out how to deal with it in an ethical manner. The other thing he said when asked about the IPO is he tried to downplay it. He basically said the IPO is a financing event, and we're not as worried about the IPO. We're more worried about creating good product. I think that's BS. So he said going public is a financing event, and I don't think that's one we're focused on in the current time. OpenAI will IPO when it makes sense for the company. That is absolute nonsense. You cannot just go public when it makes sense for your company. You have to go public when market forces allow you to go public. There's a reason Anthropic is fast-tracking going public. If people are willing to pay $8 trillion, which they were in private VCX venture funds, when that thing traded up to $580 a share, that means there's more than enough demand for people to buy for $2 trillion. And that might not exist next year. If something happens, people might not have the liquidity or the appetite to buy those shares. So I think Altman's going to have to go public this year or very early next year, because you can't let Anthropic get away with getting. Also, if Anthropic goes public and raises a lot more money than you, their valuation is already higher than OpenAI. They're going to be able to buy more compute. If they can buy more compute, that's not the best for OpenAI's competitive goals. So from that perspective, I think eventually they will go public, but we're going to have to see when that happens. Is Credo trying to flip green? Still down 10. She fell all the way to 188, but she is trying. Still down 9.4% on the day. Peng is up after hours. The headline on Peng is that they're reaffirming their fiscal year 2026 outlook. That's up 5%. Penguin Solutions announced CFO Nate Olmstead will step down on July 8th with the VP of Finance and Accounting, Aaron Johnson, appointed interim CFO. This is another memory play. It's sort of a hybrid between memory and photonics, if I understand it correctly. And so this stock right here has had a massive move over the past couple of weeks as well. That's up 5% after hours. Credo continuing to go down about 9.8%. Dell and SMCI still making this pretty big move. Wow, Dell up 2.5, dude. My freaking goodness. HPE up 30. She's just not stopping. What happened to the Trump accounts that Robinhood were doing? So those are officially live, and it's the #1 most downloaded app in the entire App Store, the Trump accounts. So you've got a lot of people that are downloading it. Really good for Robinhood, Schwab, Fidelity, Webull, all those companies that are going to be custodying them. It's just not going to change the revenues tomorrow. The catalyst from Friday was that Robinhood is being approached by other municipalities to be able to build them like a white label service of the Trump account for different companies and towns, which would be pretty bullish. That means Robinhood could get a B2B enterprise business on building these types of products. But time will tell to see if that one actually becomes a line of business for them. HP 61 after hours. Here's what Trump had to say about Iran earlier during the day.
Do you think the negotiations are over now, or is this a bluff by the Iranians? The president said, I don't care if they're over, honestly. I really don't care. I couldn't care less. If they're over, they're over. If they're not, I think they took too much time. Frankly, I think they started to get a little boring. The president said he thinks that the Iranian side was tapping us along. That is, that they were stalling for time. Ultimately, on oil prices, the president was confident that he said oil will be dropping like a rock. He said, ultimately, if the Iranians want to try and have a nuclear weapon, I will blow them up to kingdom come. He said what this is all about for him is a strongly held conviction that the Iranians should not ever be allowed to have a nuclear weapon, and that American voters will tolerate higher gas prices as long as they know what the goal is here. I also asked him about Netanyahu and the Israelis. I asked, it seems to be that the Iranians are saying they're not going to negotiate until Israel stops attacking in Lebanon. Have you talked to Netanyahu about it? I asked the president. He said, this is about 40 minutes ago, he said, no, but I'm going to ask him what's going on with Lebanon. They've been fighting for a long time. Now, since our call, just in the past couple of minutes, we've seen a report on Reuters that crossed the wires a short time ago, suggesting that the president has now called Netanyahu to discuss that. But at the time that he and I spoke, he suggested that, in fact, they had not talked yet. So then I asked him, what is the end game here in terms of the Strait of Hormuz? How ultimately are we going to get out of the situation that we're in? The president said he thinks that NATO should come in and help the United States out. He said they're the ones, he said, we don't use the Strait, we don't need it, we have a lot of oil. And I said, have you talked to anybody at NATO about that? Have they changed their tune on coming in to help the United States in the Strait? He said they would if I wanted to, but we don't need them. We don't need NATO. They were very weak and very sad. And the last thing I would leave you with is this idea of where we go from here. I asked the president, when all this is over, how do you bring this to an end if negotiations are not happening and the ceasefire is in place? I asked him, is it time to end the ceasefire? And the president said, we'll see. Let's say I knew exactly what what you're asking me to do, and I sort of do know it. Why would I tell you? So the president there suggesting that he does have a plan that he's not going to talk to the media about, naturally, to end this situation. But clearly, the president suggesting that he doesn't care that negotiations have wound down with the Iranians, and he thought.
Well, that's look, here's the thing. Market's at all-time highs and oil goes up 7% and the market keeps going to all-time highs. I don't think Trump is afraid anymore of these market headlines. I mean, he let the market fall 9% in March and he kept saying, I thought it would be down even more. So I don't think any of this market volatility, if it ends up being to the downside, so far it's been to the upside, is going to affect the way that he thinks about the market. By the way, Microchip is up because they just put out a report after hours. They expect their data center solutions unit to grow 65% in 2026, reaching $500 million in revenue, with the broader compute market now representing about 18% of total sales. That's why Microchip Technologies is up 6.4% after hours. All these companies, if they end up affirming or raising their guidance and they have to do with compute, they go up. And it kind of feels like Broadcom will do the same, but you got to have a lot of, I guess, got to have a lot of courage to buy it at these levels, given it's a $2 trillion company going into the print. I mean, even HPE market cap is, before the print, $60 billion. That's not crazy to move that, as it has a hockey stick after hours, whereas Broadcom is at $2 trillion. But yeah, I don't think Trump cares. I don't think Trump cares anymore. I think he was pretty pissed off with the Israel news this morning. I think he was definitely pissed off about this, but the way he communicated how pissed off he was by saying that, he's not a fan of the negotiating process in terms of how it's playing out anymore with Iran. I just wonder, at what point does the market say, okay, enough is enough? Like, we can't have oil continue to spike. We can't have this uncertainty anymore. And the earnings growth like HPE just put up today is another reason why people don't care. I mean, at the end of the day, the market is collective groups of individuals feeling like something matters or doesn't matter. We've added 11.7 trillion of market cap since March 30th. This is the heat map of the market since March 30th. And it just doesn't feel like the market cares as much anymore. The 10-year, was that down today? Yeah, even the 10-year below 4.5. It was at 4.7 last week. So you've seen a real decline, at least in financing costs, which has also been very good. Okay, where are these Hive numbers? All you Hive shareholders, is it coming out tomorrow morning? Because I do not see it. Meta's falling after hours. Meta's not falling after hours, but flirting with below 600. Still at 601. Yeah, the average price per gas has not, or for a gallon of gas has not gone down. I think it's still averaging $4.50 nationally. Trump did make the argument that people are willing to pay for that in the hopes of getting rid of a nuclear Iran. I wonder how many Americans even realize we're still in a pseudo war with these guys or that we're negotiating with people. Obviously, there's things like from an inflationary perspective that reminds people of it, but over the past 2 weeks, the headlines have slowed down dramatically. I mean, the last big headline we got was Axios on Friday, basically saying that it's going to be over soon. And then this morning we got the opposite. But the point is, I don't know how heavily it is being pressed in the media anymore. And I wonder if it continues to be, going into the summer. If you're mad about gas, get a Tesla. Tesla, it's an expensive car, but I mean, it's comparably expensive to other cars. Like a Honda CR-V is like maybe 2,000 cheaper than a Tesla. It's not like, 15,000 cheaper than a Tesla. And Tesla has good deals. You just got to be on the lookout for them. I got my Tesla at 0% APR, 0% for the next 5 years. So, I mean, there are opportunities that pop up for Tesla that do make it a bit cheaper. Stock draft. Yeah, let's look at that. So your boy's in first place. I don't know if I'm going to stay in first place, but we took it from Matt. I have to worry about Steve now. I don't even have to worry about Matt unless Space comes back anytime soon. He's at 67. I'm at 74. Freaking Steve and Micron. Like, how hilarious would it be if Steve ends up winning the draft in a couple weeks as Micron pumps to 1,200 and that one name, and he has Broadcom coming up, carries him to the finish line? Like, it would be hilarious if that's how it plays out. What's also hilarious is that if I didn't have Duolingo, I would be running away with this. Like, if I didn't have a negative 70% on my ETF, given the P&L is 74%, I could have literally had anything other than Duolingo. I mean, I'd be up 90 to 95%. Like, no one would be able to even catch up. So it's crazy how much one stock can hurt you, but it's also crazy how much one stock can help you. Chris right there at 35%, Tanner's at 19%, Matt 67, me 74, and then Steve at 69. So in a couple weeks, we're going to see the end of this. Again, the SpaceX IPO, I think, could still be really, really big for the space names, and that is going to happen before the end of the draft. Why did you choose Duolingo? Don't even ask me, bro. I've already gone through the story a million times. I chose it, and then I went on to shit on it for the next 4 months. Like, it was hilarious. It was absolutely hilarious. But the good thing is the new rules of the draft, like even Tanner, he ended up, picking some names that he didn't want to hold on. And technically, if you have a portfolio, you should be able to actively manage it. And so we're gonna have some new rules now where, if you have a name that you don't like that ends up underperforming, your thesis breaks, you're able to change it. And so we'll have some more established rules going into the second version of it. What do you get if you win? You get bragging rights, and you get the first pick at the new draft. So that is the benefit of it. I think it goes in order in terms of who won versus the pick order. Microchip, that's up 10% now after hours. Then HPE still up 30% as well. Okay. Couple other headlines that we have. Bitcoin. What's going on with Bitcoin crypto? Here was Mr. Tom Lee explaining what he thinks is happening with crypto.
Given that he no longer believes it's acting as a hedge against inflation or anything else, argues gold has proven to be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, equity markets, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, one, I think that's what always happens at the end of crypto winter. If someone asks me, is the thesis for Bitcoin or Ethereum broken? It's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it,
I don't know
really what's scary.
I don't know where he got the Palantir thing in there. Like, where did he throw in the did Karp say Bitcoin? Like, I was like, what is, he's talking about little Joe Lonsdale or something? I was like, yeah, like people like the founders of Palantir believe in it. And I'm like, hold on. Who said that recently? Because I didn't hear that. In fact, Peter Thiel is actually bearish crypto right now.
And you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce. And
hold on. We got a Google headline. Alphabet. Oh, crap. Hold on. Got two headlines. Alphabet reports proposed 80 billion equity capital raise. And then Berkshire Hathaway to invest 10 billion in Alphabet. Hold on. What's happening here? Stock's flat. Hold on. What does that mean? 80 billion capital raise. Is that a mixed shelf offering to dilute by 80 billion? That's super bullish NVIDIA. If they are increasing capital. But where are they? And then Berkshire investing 10 billion. If they're announcing that, that means Berkshire is not buying it on the open market. Berkshire is entering into a special deal with Google, which they did with Apple a while ago. There you go. There's the pump on Google. There she goes. There she goes. 380. I still don't understand this headline, though. I don't get it. Berkshire. Is Berkshire buying Google at a discount right here on this 80 billion capital equity raise, which would make them 1/8 of Google is planning to sell 80 billion in new shares to fund growth, which is dilution, right? That's dilution. Berkshire Hathaway is going to buy 10 billion of that. Hold on. This is kind of bearish, though. This is dilution. 80 billion in new shares. That's a lot of, that is, I mean, it's not bearish because they're going to spend it on stuff that's going to help them grow, but the short-term impact on the stock could be negative. But then you got the Berkshire headline coming in. That's more bullish because Buffett's buying. What price, though? What freaking price are they getting on this? There's no way they're paying market price for this. That's not what Berkshire does. There's absolutely no way. Hold on. All right, here's the headline. Proposed offering. 30 billion underwritten public offerings consisting of 15 billion in depository shares representing mandatory convertible preferred stock and 15 billion in Class A common stock at the market offering. Wow. 40 billion Google's ready to dump at the market. That's a decent chunk offering program for Class A common stock. In addition, Alphabet has reached an agreement to sell 10 billion of stock to Berkshire Hathaway in a private placement at $351 a share. Huh. Buffett's buying at $350 a share. Wow. That's not that much lower than where we're at today, $375. What's the premium on the stock right now? That is Buffett's getting it at a 5% discount. Oh, Broadcom's got to be moving on this, right? Broadcom's moving on this. NVIDIA should be moving on this too. NVIDIA's not. It's actually going a little red. Broadcom is going to get a lot of money for those TPUs, baby. Marvell should be moving. Marvell's not moving. Okay, so the street's giving it to Broadcom. They're not giving it to Google. Or they're not giving it to NVIDIA. This is interesting. This is interesting. Google's doing what all these smaller companies have done to fund their growth. They do ATMs. My gut reaction is the bearish part is like, damn, they like free cash flow is not enough. Operating income is not enough. There is so much money that these guys are going to need that they have to dilute shareholders. I mean, Google was buying back stock for the past 5 years. Google's now issuing new stock, and this is incredible. But again, they're putting up the growth rates to justify it. The more interesting thing about this, though, is Berkshire agreed at $350. They think it's a deal, which doesn't really feel like a Buffett type of a move. Like, you would think Buffett would want it way cheaper in this private placement. They are getting a 5% discount. Google right there, $370, now down $2. Is this good or bad? I don't think it's bad. It's what is inevitable. Google has to do this to fund their growth. If they're going to continue spending on CapEx, and I guess the free cash flow is not enough. I know it's not Buffett, but guys, I mean, Buffett I don't think Greg Abel makes every decision unilaterally. It's only been a couple months since Buffett has left. I would imagine Buffett is at least consulted on some of this stuff. Maybe he's not. Maybe he didn't care. Maybe this is fully Greg Abel's business now. But this is interesting. Okay, so the problem is, my gut reaction is I feel like Meta might do the same, and Microsoft and the others. I mean, I remember all these guys are in a prisoner's dilemma. All these guys are if Google has to raise $80 billion of capital, Meta's getting a sympathy dump. Why wouldn't Meta have to raise more capital? Like they can't let Google buy up all the GPUs or build their own TPUs without being competitive. Why wouldn't Microsoft have to raise more capital? And they all have relatively the same operating income, free cash flow. They're in the hundreds of billions, so it's not like Microsoft and Meta don't need to tap the equity markets, especially because they've all issued convertible notes already. They've all tapped the bond market over the past year, and it's still not enough. Is this bullish neoclouds? I think it has to be, right? How is this not bullish? The Nebiuses and CoreWeaves of the world are up a little bit after hours because that money's likely going to be, in some respect, going to them. That's why Broadcom's taken off. Remember, this market, outside of the past week, as software starts to come back, this market has been the beneficiaries of CapEx, which Broadcom, although they spend on CapEx, they are a big beneficiary of Google's CapEx, have been the winners, which is why it's puzzling that NVIDIA is not at 250 yet. But the large caps have been the losers this year, outside of Google. It's done the best out of all of them, and Apple. But again, Apple doesn't have the CapEx thing, so it makes sense why Apple's done the best. Is Celestica up after hours? Celestica is up about 2%. It was up 10% of the day. This is interesting. I don't know. What do we think? What do we think? Gut reaction, bullish or bearish? Let me do a poll in the chat. That is, wow, $40 billion at the money. At 410 the other day. That means next time Sundar thinks it's right to raise some capital, I mean, it could happen tomorrow for all they know. They might sign a deal with Cypher tomorrow. They need more money, and then boom, or they might wait till it gets to 430, but that would stop the rally at 430 unless there's enough demand to deal with those shares. Bullish or bearish Google? Not the rest of the market, but bullish or bearish Google. What do you think? Berkshire, though, that's right. They are picking a winner here. Berkshire is not touching Meta. They've sold their Amazon. They've completely disregarded any other tech company in any meaningful way. They don't have Microsoft. Google, Berkshire's up a little bit after hours. I mean, it seems like Sundar has been getting pretty cozy with Greg Abel. There's no other way. And they probably, so, Berkshire, how sensitive they are on valuation, they probably had a team of 50 people analyze Google at 350 to figure out if that was a good price to pay. And if you believe in Berkshire's management philosophy, I mean, if 350 is what they're willing to dump $10 billion more into Google for, maybe that's a reasonable price for the Googs. It's not that far above it. Google right there, 369. I think once again, it's bullish everyone except Google in the short term. Long term, look, if Google's, just like Jose said in the morning, if Google's going to spend 80 billion and they're going to make 240 billion, then yeah, the market will inevitably give them the bid because they're spending and they're growing. But I mean, this is just incredible to see how they're doing that. And the part that annoys me a little bit is that the other Mag 7s have to be thinking of this, right? There's no way that Google can be the only one, especially if Google stock barely gets touched after hours or over the coming days, right? Let's say Google's relatively flat. That means the market's willing to absorb it. And so who's going to stop Nadella or Meta to be like, hold on, we didn't know we could dilute you guys. We were going to the bond market. We stopped buying back our shares, maybe cut the dividend a little. We could dilute you. You guys are okay with us dumping shares on you? Okay, cool. That's fine with us. I mean, if they have the freedom and the autonomy to realize the markets are willing to just buy their stock, fresh issued stock, it's almost like we're past the era of buybacks. Microsoft also dumping after hours. Not by a lot, but still red. I mean, we are in a new era for the Mag 7, folks, if that's what's happening. Why do they want the money? The press release, let me pull up the press release. I don't even pull that up for you guys. The press release says, well, the press release says AI infrastructure. What a market, dude. What a freaking market. Money grab before IPO season. Ironically, Google has a 7% stake in SpaceX and a 15% stake in Anthropic. So, I mean, it looks like they are, you know, that might be part of the that's actually a great point. If they think their stock's going to pump as a proxy to 3 IPOs that are coming up, 2 of the big ones, SpaceX and Anthropic, let's say Google gets to 450 or something, just because if Anthropic goes to 2 trillion, Google owns 15% of it. Like eventually the market's going to probably price that into Google. Google 367 after hours, down 2.3%. Why wouldn't that be a perfect time for them to say, okay, at 450, we're dumping some stock and we're going to raise, not only could they raise money at the market, they can also dump their shares in Anthropic, or at least trim, you know, trim some SpaceX at 2 trillion, 2.5 trillion. Imagine it goes to 3 trillion. I mean, they could really get away with highway robbery here over the next couple months with the ATM and the IPO allocations, which is what they should be doing. If they're going to keep spending this much on CapEx, they have to get the money from somewhere, right? Yeah, they own a lot of ASTS. That's also correct. Huh. That is, I did not expect that headline. 65% of you say bullish after hours. Yeah, short-term Google's definitely taking a little bit of a dump right here. Any dilution news. That's why I didn't believe it at first. I was like, hold on. The Mag 7s don't dilute. Like these aren't small little companies that see their stock pump and like, okay, we got to dump it. They don't do that, you know? They buy back their stock. What a different world we are in, folks. Instead of buying back, they're issuing shares. Don't you think they're tempering the announcement with announcing it in conjunction with Berkshire? 1,000%. I think they are trying to land it softly by saying, look, we're dumping stock on you guys, but we have one of the greatest investment firms on planet Earth that we gave a 5% discount to, not that crazy from the current price. And they are more than happy to buy 10 billion. Now, granted, Berkshire has 400 billion in cash. So technically 10 billion is kind of nothing. Also, they bought a lot at 240 already, but it is definitely helping, I think, manage the blow. On Google, Hive is up 9%. I do not have the numbers. Oh my goodness. Hold on. Is this true? Holy crap, folks. Hold on. Before we get into Hive, which I still don't have the numbers yet. A Robinhood insider just bought $20 million worth of stock. 249,000 shares at $80.30. Oh my goodness. I don't think we've seen an insider buy at this level in like 5 years. Since they went public. 249,000 shares at $80.39. Still don't have the numbers on Hive. It's not Vlad. It's Malka Meyer. Malka Meyer. I know this person. I'm forgetting exactly what they've done, but they've been an investor for a long time. They're a director at the company. I believe they're on the board. They've been in this for a minute. I don't have the Hive numbers. I still don't have the Hive numbers. Don't see it yet. Don't see it yet. But the market likes it. What a crazy after hours. Google's dumping stock. Berkshire's buying 10 billion. A Robinhood insider just bought $20 million worth of shares. Is Hood moving after hours? Robinhood, not anything after hours. And then Hive, 10%, but I still don't see the move. He bought it at $80.40. 20 million. Credo's still down 10. Dude, where are these Hive numbers, bro? Where the hell are they? It has to be out for the stock to be pumping like this. I don't see it, guys. I don't see it. It's pumping, but none of you guys have the numbers either, I think. But it is up. Yeah, dude, Microsoft's losing the pump because of Google. This is actually interesting. This is if we're entering an era where the Mag 7 think they can dump stock on investors. It's a big deal because that has not been the era for the past 10 years. They buy back their stock. They don't dump stock. And if they're getting ready to just be like, hey, do you want us to grow or not? Okay, we need to issue shares. We need to raise capital. We need to grow our CapEx. Then, dude, the best buys, once again, are your Microns, are your Photonics plays, are your NVIDIAs, are your AMDs, because they're the ones that are going to benefit. Now, the Mag 7 theoretically will benefit as well because they're growing, which should mute the response of the dilution, but still, that's pretty incredible. Is Amazon dumping after hours? Amazon, yep. All the Mag 7. I feel it in my gut right now that this is the market recognizing we are in a new era for the Mag 7. I mean, I think Google just unleashed, they just opened Pandora's box here when it comes to dilution. Yeah, well, Apple wouldn't have to dilute, right? Because Apple's not spending on CapEx. So for Apple, Apple's green after hours. The rest of the Mag 7 are red. I don't know how I feel about this. Like, I don't know. I haven't formed my thoughts yet. Still don't have the Hive numbers. But this is weird. You would imagine NVIDIA should go up. I mean, the reason Google's obviously going to spend a ton on their own TPUs and all that stuff, but $80 billion, some of it's going to be going to Micron and NVIDIA and AMD. Some of it's going to be spread out. Mag 7 doing offerings as a top. Well, the thing is, it can't be a top if Google comes out in a few quarters with like 90% cloud growth, right? At the end of the day, the street's going to buy it. The problem is if the street buys it and Google then dumps more shares, it's like it's kind of like Bezos back in 2024. Every time Amazon hit a milestone, Bezos would be there to just dump shares, and it was this imaginary wall that made it tough for Amazon to move up. But once again, it's reaffirming Jensen's thesis. I mean, for everyone saying CapEx is slowing down, how? How is it slowing down? Google's ready to literally dump shares at the market for almost $100 billion, and they already convinced Berkshire to buy 10 of the $80 billion. And Berkshire is willing to do it, I guess, because Berkshire thinks that the CapEx going up is going to be long-term bullish. Let me see if there's any coverage on this. Wow, this is unbelievable, dude. Unfreaking believable. Yeah, this is why Micron's $1 trillion. I agree. Like, forget the pricing power, forget the supply demand dynamics. All of those are well-worthy things to put into consideration, but Google's not slowing down. Microsoft's not slowing down. I think we have the headline right here on the Googs. Let's see what they're saying here.
$1 billion. This is an equity capital raise in the spirit of expanding its AI infrastructure and compute ambitions. Now, as part of this announcement, they said that Berkshire Hathaway has agreed to invest $10 billion in Alphabet in a private placement. They say that concurrent with that, they've got underwritten offerings, $30 billion in underwritten public offerings consisting of $15 billion in depository shares representing mandatory convertible preferred stock. They also talked about at the market offering, $40 billion at the market or ATM, offering a program for common stock and Class C capital stock over time. This, of course, feeds into Alphabet's larger ambitions here. They're looking to, we knew as of last quarter, they had upped their CapEx spend to $190 billion. Now we're looking at part of how they plan to fund this. It's unclear at this point whether this is additive to what they already announced. I'm out to Alphabet. We're also out to Berkshire Hathaway about the investment. Guys?
Yeah, Mac, I mean, obviously the price reaction is probably because maybe people are trying to extrapolate. Does that mean they're going to spend even more? Yeah. Obviously slightly dilutive, not very dilutive for a company of this market cap, but it does raise the question because Google's been out there raising debt as well, and maybe they felt as if they reached the limit of how much more leverage they wanted to put on.
Oh, precisely. And so that's specifically the question that I'm asking. And does this mean that, you know, in the upcoming quarter, we're going to see that $190 billion top end of the CapEx pushed even further out if they're looking to raise this in an equity capital raise? So that's the standing question here.
Yeah, I mean, remember we were talking about Google and others going overseas.
That's right.
In
Yeah.
every market around the world, basically trying to raise debt. So I guess that's a question.
It is true. I mean, clearly they could take on more debt. It's a matter of whether they feel it's advantageous. And it wouldn't surprise me either if Berkshire Hathaway, which already has a position of close to $20 billion or so in Alphabet, if it was almost a reverse inquiry, they'd like to own more. This is an efficient way to do it. We don't know that, but sometimes that happens, or at least they're known to be a potential anchor investor in the new offering.
Right. But I think the notion, though, that, are they going to spend even more?
Yeah.
I think that's a huge question, right, Mac? I mean, that's really what's gotten a lot of these stocks, a lot of Mag 7 in terms of the spending plans. Investors are unhappy with that. They want to go to where the money is being spent, not the spenders these days.
But I will say this, over the last few quarters, you've seen Google rewarded for its upped CapEx guidance because of the fact that GCP, their Google Cloud business, has done so well. It's something that has become advantageous and really paired with their Gemini offerings. It was just 2 weeks ago that CEO Sundar Pichai talked about Gemini 3.5 Flash, this new model that really was compatible with their enterprise offerings through the cloud business. Said that essentially if you moved your business to Google Cloud today, you'd basically be spending $1 billion a year if you moved 80% of that workload to them. And so this is just a part of this this flywheel where they try to bring people in, spend more on CapEx, and it's advantageous to the cloud business clearly.
Right. Mac, thanks.
Quite a switch, though, from going from we're buying back a ton of stock and we have lots of free cash flow to now we're net issuers.
Yeah.
I mean, yeah, that was my immediate reaction as well. It is quite a difference from we're buying back stock and now we are net issuers. I don't think it's fully bearish. Don't get me wrong. I'm just, we've never seen anything like this before from the biggest companies on the planet. And theoretically, if the Mag 7 can get away with this, why wouldn't they? Like, if more and more people are out there willing to buy Google and own the stock because of whatever reason, general liquidity, the market participants are more excited for Google's AI ambitions. More people are willing to invest in stocks in general as a hedge to inflation. Like, whatever reason is out there, if there is demand for shares, this is the easiest way to raise money to spend on CapEx versus tapping the debt markets and leveraging up or having to sell their private investments. So, I mean, it's pretty incredible. Why is Oracle tanking? Well, Oracle is down 2%. It was up 10% during the day. Oracle also has engaged in these ATMs, but they've done it via the bond markets. I mean, they've done a little bit of ATMs. They've really levered up aggressively in the credit markets, which is why their credit default swaps have outperformed the stock this year. I mean, look, here's the thing. Maybe the market's thinking that if the Mag 7 can raise money, there is less of a need for Oracle in some of these data center conversations, although I think that would just give them more of a TAM and more of a market to partner with these companies. So I'm not sure exactly why it's down, but you would imagine all the data center names potentially getting hit off this. Although, yeah, Oracle should be a beneficiary of this. So it actually is kind of confusing. Is Nebius down? Nebius is up. CoreWeave is up. So that's kind of Oracle specific right there, which is a little weird. HPE is up 40%. Why not? I mean, honestly, the move doesn't even it doesn't scream like euphoria on HPE. Google literally just said we're going to raise $80 billion by dumping shares in the open market. HPE inevitably, based on their networking and server business for these data centers that Google is trying to build more and more of, that Jensen said is going to cost $100 billion per gigawatt soon, they're going to benefit from it. So is SMCI, so is Dell, so is Micron, so is Broadcom. I mean, SMH in general is going to be the winner. Did SMH hit a new all-time high today? I think this is not an all-time high, but very close. 607, all-time high was 621. As that was still green. Wow. What do people think, bro? This is kind of crazy. AMD 508. Or maybe it's not crazy. Maybe it's just the new world we live in. It is a reality check. It is a slap in the face to everyone that, oh yeah, money is not just coming out of thin air. Like, the money's got to come from somewhere to pay for this CapEx. Now, again, if the market absorbs it, who's going to care? If the market is ready to absorb these shares, even Rocket Lab, right? At least for the short term, the market absorbed the dilution at 130. I know now it's below 130, but it pumped from 130 to 150 after a couple of days from the dilution event. And it's almost like no one cared. This is the top. I don't know if this is the top. This is definitely one of the, if you were writing a story about how the top was formed, oh, Michael Burry is going to have a field day with this one. He is going to have a field day. But I do not think this is the top. I think they have to get the money for the CapEx. It does make you wonder, though, are the Mag 7 going to outperform over the next 2 years if they're just going to keep diluting? Now, I'm saying the Mag 7, but Google's the only one who's introduced this. I just can't imagine Zucks and Nadella are looking at this press release and being like, oh, yeah, thanks, Sundar. I forgot. We could just tap the equity markets. Call Steve. Let me see if Steve will pick up. Let's see. Steve doesn't have a job. He should pick up. There should be no reason for Steve to not pick up. Can't tell me he's in some corporate meeting or something. Oh, imagine we get to break the news to him. Let's see. Let's see. Steve. What are you doing?
I'm driving.
Okay, you're live. Where are you driving to? You're unemployed. Why are you driving?
Don't worry about it. I still got things to do.
I told you guys, Steve's a mob boss in his free time. Anyway, Steve.
No.
I've got to tell you something. All right, have you paid attention to the news in the past 20 minutes?
I have.
Oh, so you know what I'm about to tell you.
I do.
Were you listening to the stream?
I wasn't.
Okay, so how'd you get the news then?
You think I don't have stuff sent to my phone and read to me?
Okay, then I want your raw take. What the hell is Google doing dumping $80 billion and an ATM offering? And as a Google shareholder, how do you feel about it?
Chris and I are going to do an emergency podcast tonight at 9. I'll give you a preview.
Yeah, this definitely requires an emergency.
Yeah, this is a emergency. Chris and I already spoke. Emergency podcast. I called them. Would you say that I've been conservative with respect to wanting to get out of NVIDIA before CapEx goes into maintenance mode from expansion?
Yes, I would say so.
And I have moved my expectations out as the data warrants, correct?
That is correct. Yep.
Forget everything I said. This build out, 5 to 10 years minimum. From here, 5 to 10 years minimum. Alphabet just threw a gauntlet down and they said, yeah, we do $150 billion in operating cash flow plus a year. We've been tapping the debt markets, and guess what? It's still not enough. We're going to dilute everybody, and nobody's going to care because nobody can match us when you think about the biggest pure play in AI. And what does it mean? Well, depending on how crazy Nadella wants to get, they may have to pause buybacks. Which they're not really doing much. They're doing 25, 30 billion in buybacks. They may have to pause it. We're in the mother of build-outs right now, and it's not stopping anytime soon. I can tell you that right now.
Okay, so there's a lot to break down here. Before I double down on what you just said around NVIDIA, because I agree with you. My initial reaction was, holy crap, buy the picks and shovels because they're going to get all the money. Google doing this, like, on one hand, I'm like, it's not a big deal, right? If people are willing to buy their stock, then that's okay. How do you think about this versus?
Oh, it's a huge deal.
It's okay. So is it a huge deal in the context of what it means for NVIDIA, Broadcom, et cetera, or is it a huge deal in terms of what it means for the market's appetite to digest dilution from the Mag 7s?
Forget the market's appetite. If we're not willing to digest the dilution from the most profitable companies, we shouldn't be invested in them. It's a tremendous deal because it just signaled how real this is and how every bear is wrong. And we're going to get two waves. We're going to get the initial wave of the picks and shovels, NVIDIA, Broadcom, AMD, the Vertivs, Edens, everybody who has to build and put shit in data centers. They're going to see a windfall of revenue coming in from all the CapEx spend. But then it's going to swing back to Alphabet because they're not doing this not to make a boatload of money. If you bring up a 10-year financial chart or financial sheet and you look at the way cash from operations has grown, with CapEx. CapEx fuels it. They could buy back their stock. They're choosing to dilute shareholders because they think that has a better use of shareholder value today for the future than just spending their free cash flow. They just said, everything you thought about, forget it.
Dude, I feel like, correct me if I'm being a little hyperbolic, I think this is the biggest piece of news we've gotten in 2026 in the markets. The Mag 7 used to buy stock back from shareholders for the past 10 years. That's just changed.
It just changed. They just flipped the script, and now there's a question that gets raised. Okay? Now the question is, what does Zuck do?
I knew you were going to go there. What does Zuck and Nadella do?
No, but there's three parts to it. Zuck is one leg of the stool. Okay? He's not playing the same game. So he may be okay with what he's doing. The second leg is what does Jassy and Nadella do, because they're playing the same game with data centers. The third leg of the stool is Apple screwed, or is Apple the smartest company out of the bunch? Because if Alphabet's right, Apple should not trade at more than 30 times earnings because they're so far behind. They have nothing to monetize except for their install base. So there's a couple of questions that need to be answered. We're not going to get answers for a year or two, if not longer. But immediately we'll get answers on Jassy and Nadella. Like, I think that they're going to have to dilute people too.
They're going to
think about it.
Because you made this point for a couple of years right now about the prisoner's dilemma. There's no way
100%.
Google's getting $80 billion of essentially free money by dumping it on shareholders. Why wouldn't Nadella do the same?
Do me a favor. Pull up their cash flow statement. I believe that they spent $92 billion in CapEx in 2025. They're expected to do 190 this year. So if you're increasing by 100 billion, and on the conference call, they told us they're spending more in 27, 27 is going to look like 250 to 300 billion in CapEx.
They did 109 in the trailing 12 months.
Yeah, not trailing 12. Just give me 2025.
Yeah, 2025, 93.4. You're right.
93 billion. So you're going from 93 to 190. You're going up 100 bill
Goodness.
in a year. Right? You're going up 100 bill in a year. And then on the Q1 conference call, they told us they're spending more in 27. You're not doing an 80 billion offering at the money and just going to freaking 210 off of 190. That's not happening. So next year is going to be 250, 300. And then, Jassy's at 200 this year. What do you think he's thinking? Jassy's on the phone with Bezos right now. I have his phone tapped. That's how I know. Just kidding. But he's on the phone with Bezos right now. Be like, Jeff, what do you want to do? What do you think? We go to 300 next year? Take no prisoners? You don't have a choice.
Dude, Amazon should just do $1 trillion of CapEx. Like, just beat everybody at this point.
They don't have a chance. Now, here's the real question. Do any of these companies get religion? And when I say get religion, not rein in spending, do any of them become power companies? Do any of them just flat out buy a utility company? Or just flat out buy infrastructure now instead of subbing it out?
Well, okay, so question. Gut reaction. This is bearish or bullish for the neoclouds?
I mean, it has to be bullish to some degree.
It has to be bullish, right? Because even if they vertically integrate, like you're saying, I mean, Nebius and CoreWeave have more deals lined up.
There's just not enough compute. Like, you could make an argument that it's bearish neoclouds only because if Alphabet's building this much out, why do you even need the neoclouds? But I think the contracted demand shows us there's just not enough compute, period. So, I mean, you can make the argument either way with that. So, honestly, I don't even care about the neoclouds. Like, okay, cool, Nebius is up to 300. I'm a shareholder. I really don't care. It's not the story.
So Jensen was right about everything, basically.
Yeah, like we've been saying. Why would you bet against Jensen?
Well, he was right about the software companies not being dead. And now it looks like he's right about CapEx.
And by the way, you watched the keynote last night, right?
Yeah.
Jensen just went to war with Intel and AMD.
Oh yeah, we talked about that in the morning.
And guess what? The second that I can buy one of those damn computers, I'm buying one. The
Yeah.
second.
I mean, it's just incredibly bullish to see them expand into all these different areas. It really feels like this is a new era we're entering into, because I agree with you wholeheartedly. There's no way Google can get 80 billion of demand, 10 billion already from Berkshire, which is kind of softening the blow. And then Jassy and Nadella, maybe not Zucks, but the other two, thinking, why wouldn't we do the same? If people are ready to buy Google, they would be ready to buy us.
Nobody's not buying Amazon, Microsoft, or Alphabet because they're issuing shares. Like, these are the greatest companies in the world. If they're saying that we have to fund this, one, is there anybody that can compete with them? No. Nobody can rebuild what these companies have done. Nobody can compete with them. Nobody.
I want to force you to give me the bear case on this. If you had to interpret this announcement as bearish, how would you do it from whatever angle you choose to?
Yeah, so bear case is not that hard. It's just not probable. There's not enough interconnect. There's not enough electricity. There's not enough utilities to actually power all this. And whatever they're going to spend money on is going to sit idle because they can't light it up with electricity, which is probably a dumb bear case. Second bear case would be that everybody's wrong on AI and it's not as big as what everybody says and people aren't going to use it as much. Like, other than that, there's no bear case. What's the bear case? Did Alphabet just tap the debt market?
No, they tapped the equity market.
Exactly. So they didn't leverage themselves.
They didn't leverage themselves.
All they did is issue shares they've already bought back. Think about it. That's all they've done.
Dude, they bought their shares for the past 7 years, and now they're like, hey, take these back.
Yeah, it was a little bank account. That's all. They bought them back every year for a rainy day, and now they're reissuing them because they need the capital to build.
Steve, I'm flicking my lighter on stream because that was some fire analysis from you, bro.
I mean, I'm just saying, like, thank you, but it is what it is. Like, they have been buying shares. It's not like Tesla that just has a history of diluting shareholders. This company has been buying shares back hand over fist for a decade. They're not issuing shares into the ground. They started a dividend program. They're wildly profitable. I mean, this is not Tesla. So people should take this very seriously.
I just had to light a candle for that analysis, bro. I just had to. That was pretty incredible.
The question is, what happens now? Like, what do you do? I tell you what. I'm just going to shift it a little bit. We got 2.5 weeks left. I may win the stock draft because of this news.
I was saying that today. Look, this news. I mean, we have a lot to analyze on this, but this news, I think.
I got Broadcom and Micron.
But this news makes it more obvious than we can imagine that any dip on the Microns, the Broadcoms, like all the infrastructure players that are out there, they're going to get a bid because Google and Amazon are like, Amazon can't come out and lower their CapEx now that Google did this.
No, absolutely not. If anybody was worried about somebody being the first company to lower CapEx, that is not happening. That is not happening next year.
That's done. We're done.
It may not even happen in 2028 or 2029. Like, you can't do that.
And I'm not trying to be naive on this piece of news. There's no reason Google's diluting by 80 billion for fun. Like, they're doing it to spend on Broadcom and Marvell and all these companies, right?
It has nothing to do with being naive. Michael Burry is flat out wrong.
Oh, he's going to have a field day with this. He's going to have a field day with this.
Listen, they're wrong, and I'm going to say it again. Dr. Burry, I will pay for you to fly out and talk to us. 100%. Not even a question. You tell me what airline, I'll pay for you. I know you don't need my money, but I will pay for you to come out.
By the way, you're already live right now. So I had a call with a certain someone who you've been wanting a certain someone to be on the podcast for a while. Let's just say the call I had with the person is very close with that certain someone, and they're thinking of us doing it in October. So
Interesting.
it's someone you've been asking for a while. So
I think I know who you're talking about.
they want us to come to their location to do the podcast as well. So they want to make it like a big thing. So
You know, I can get on a plane anytime. I don't have any obligations in the world except for the audience.
it would be a fun. They called me today. They called me 5 minutes before I went live. I was like, dude, I have 5 minutes. He was like, hey, would you guys be willing to interview? And I was like, yeah. We would. That would be awesome. That'd be great.
Yeah, no problem. No problem. You just tell me when I'll be there. But this is the biggest news that we have had in I don't know how long. This is a ChatGPT moment. That's what this is the equivalent of.
This is crazy, bro. I don't think I thought in 2026 a $5 trillion company would be diluting by almost $100 billion. And what was I didn't ask about this. What was your reaction that Berkshire said at 350? Yeah, give us 10 billion.
I mean, I think it's kind of silly that they sold Amazon to buy more, or not sold it to buy, but they sold Amazon when they're buying Outfit. Just hold Amazon too. I mean, I think Alphabet's a great buy here. In all seriousness, they're the most vertically integrated company out there. When you really think about it. Android, they own. They have a stranglehold on half of the cell phone usage and tablet devices. Okay. You have Google Cloud, you have Search, you have Gemini. They are the most vertically integrated company out there. I mean, that's why I keep saying they're the biggest pure play in AI.
This is incredible. This is all right, Steve. Thank you for your analysis. I'm linking Steve's YouTube. Please make sure to subscribe to him. He will be live with Chris tonight, emergency podcast. And that was some really good analysis, Steve. We appreciate that because I think this is top 5 biggest pieces of news we got so far this year.
It has to be. And you know what? Could Anthropic have filed the S1 at the most perfect time?
Well, we were talking about that as well. Google owns 15% of Anthropic. They're going to get to $1.5 trillion if they're already at 960 in privates. SpaceX is probably going to get $2 trillion. I mean, Google has a competitive advantage against at least Meta, because Amazon has Anthropic, Microsoft has OpenAI, but they could sell 10% of their SpaceX, Anthropic, and 80 billion of new stock, and they would have funded CapEx for the next probably year and a half.
But think about this. Go a step further. While that's all correct, go a step further. Anthropic just filed an S1. And if anybody was doubting how real this is, Alphabet just said, you guys are so stupid if you think this isn't real.
That's true. If Alphabet's ready to, because all this CapEx is going to help none other than Anthropic, which is why the S1 actually makes sense in conjunction with what Google's saying right here with the dilution.
I mean, before we go, just add up the cash from operations for the past decade for Alphabet. I think it's like $1.1 trillion or something like that. I don't remember it off the top of my head, but just sum it up real quick. I mean, I do think it's a crazy number like that. You're telling me that a company that's doing this much cash from operations needs to dilute shareholders? It doesn't get more real than that.
Okay, I'm pulling up 10 months or 10. You said decade?
Yeah, past decade of cash from operations.
Okay, so let's do the math real quick. I'm just gonna do rough math. We had 2025, 164, then 125, 190. Yeah, I mean, it basically was 500 billion for the past 700 billion for the past 4 years. Past 3 years was 174, 164, 125.
Yeah.
That's already putting us at $500 billion roundabout. So yeah, about 1.1.
Well, you're at 750 to 1 trillion in a decade of cash from operations.
Yep.
And you're telling me that a company that does that much, they actually could be the largest cash from operations company over the past decade. It's either them or Microsoft, but I mean,
this is
they have to dilute. Why would we be worried about a company like that? That's the biggest thing. This isn't, and I'm going to have a field day because the AI bears are going to be chirping at me and I'm going to slaughter them.
Well, the bears are going to make the argument that dilution is bearish. I mean,
they're so dumb. They're so dumb. That's why they're bears. That's why they're bears. Oh, so you're telling me that dilution from a company that does this type of cash from ops is bearish? What do you think they're spending it on? Going to buy lollipops for all of you that are crying? Not happening. They're spending it to fortify themselves and be the de facto winner of the AI revolution. These companies are not in the business of generating less cash from operations.
Wait, so question. Would you buy Google after this news, or would you rather buy? But if you know that they're going to keep diluting, do you think the shares might be muted for a bit, and you'd rather buy like a Broadcom that benefits from all the?
I mean, look, sure, you can make the case that Broadcom, AMD, NVIDIA, Micron, Taiwan Semi, Taiwan Semi is probably what we should be buying. You can make the argument that you buy those first, you make your money on that, then you roll it into Google because Google could be sideways for a little bit until the market digests this. Completely plausible. But if you have an idea that, listen, I'm just going to buy Google for the next 2 years, I don't care, I think you're going to do pretty well over a 5 or 10 year period.
Yeah, and you got Berkshire. I mean, that's a big institutional cosign.
Hey, Berkshire bought it at 240. Now they're buying it at 350. What does that tell you?
Yeah. All right, Steve, thank you. We appreciate the analysis, and we'll catch you tonight.
Sounds good. I'll see you later.
Later. What a crazy, crazy piece of news after hours. I mean, absolutely crazy, dude. I didn't expect this, guys. I think this is top 5 biggest stories of this year. If we can look past the Iran war, this is a pretty big deal, man. Where is Hive earnings? Yeah, did I miss them? I have more Iran updates before I can give you Hive updates. Where the hell are these numbers? I'm sure you guys would put it in the chat if you saw it, but I don't see it. Iran, what do we got? Trump says he thinks deal with Iran could happen over the next week. Dude. You know the Joker in Batman where he just starts laughing uncontrollably because it's like there's nothing else to do but laugh? I think Trump has said this at least 7 times over the past month. Trump said a peace agreement with Iran could be even better than a military victory. It's not a simple thing. He said, you're talking about a real large country, very large country making a deal, tremendous hostility, really. He continued, so it's not an easy thing for them. It's actually not easy from our standpoint either, but we're getting what we need to get. He didn't tweet. He told CNN this. As for when the memorandum of understanding, not moratorium of understanding, memorandum. I don't know why people make the mistake of saying moratorium of understanding. It's memorandum of understanding. As for when the memorandum of understanding to reopen the strait will be completed and agreed to, Trump said, I think you're talking about over the next week. He said he has not agreed to it yet because, quote, I still have to get a few more points. Okay. There you go. That is what we got. This is incredible, dude. This is absolutely freaking incredible. Yeah, MCHP also, they increased or they reaffirmed their guidance. That's why they're up after hours. How is this not, wow, 13%. This is really getting a move right here. How is this not just, okay, buy AI infrastructure and shut up if this is what Google is doing? I actually think in the short term, this is the AI infra names are better than the Google. Eventually, Google has to stop the CapEx and that money will go back to free cash flow and then they will look absurdly cheap. But as of now, I mean, Google's multiple is not the deep value multiple it was at a year and a half ago. So their CapEx actually does hurt their multiple at these levels, unless the stock takes a tumble. Yeah, Nokia, Micron, Nokia's up after hours, Broadcom's multiple compared to AMD is significantly better, even though their multiple now is getting up there at 53 times. Robinhood did buy WonderFi. They closed the Canada acquisition, so that is official. That was also announced today. Celestica's up 2.5%. Dell, of course, why not? 3.3%. HPE, 36%. I mean, this is just the amount of money that is going to be going into every single one of these names. And then these smaller ones, even if you're just speculating here, Akil, $3.6 billion, Hive, Cypher, I mean, Iran, I know this one has the most amount of noise. It hasn't really moved yet. But how does Iran not catch a bid unless the company literally messes up? I mean, Daniel Roberts literally took a picture with Jensen and Michael Dell, did an interview with them last week. You would imagine they're going to get a pretty big deal. The compute constraints are so dramatic that the money has to flow to these smaller players, at least to an extent. Microsoft getting hit right here. I think the street's kind of upset that at some point they're going to have to deal with this dilution, and not upset in a purely negative way, but that means that, yeah, Microsoft, Amazon, short term, we're going to take them down a little bit. Oh my goodness, bro. This is crazy. This is freaking crazy. Yeah, again, a lot of these names also pumped. Oracle pumped a lot over the past couple of weeks. So it's down 3% after hours, but it's what we talked about in the morning. It is not crazy to expect pullbacks on any name at this point. Even the software names that are still down year to date, but have ripped. I mean, dude, some of these names are up 40% in the past 2 weeks. They could take a breather. Let's get some Bloomberg coverage on how the market could be thinking of this. I really wonder what the analysis is going to look like across the board, because now you've got a lot of people realizing we've entered into a new era for the Max 7.
Down just a little bit here, partly on the dilution that will come out of this, but I'm more focused on the money and the money that's being, I know they telegraphed this already, but this is already a company sitting on $160 billion cash on their balance sheet. Do they really need to go to the public markets for this?
Well, right now they feel, the window is right in terms of raising money. We see so many companies, big IPOs, in terms of the money that is being raised. And in the case of Alphabet, even though they raised their CapEx, it feels like they could do more simply because they have the advantage of vertical integration with TPUs, their own LLM, where why would they be equal in CapEx to a Microsoft? And that's where I think they're trying to go bigger.
So I want you to just take a step back, particularly for our viewers that haven't followed this much. When we talk about seeing, $80 billion, well, in this case, $180 to $190 billion being deployed on CapEx, where exactly does that money go?
Well, it's for building data centers, for giving money to TSMC to make those TPU chips, really doing things on an end-to-end basis. Unlike a Microsoft or a Meta that have to buy those chips from NVIDIA and pay those 75% gross margins, Alphabet is all using its own chips. And even Anthropic has trained its model and uses TPUs even for inferencing. So from that perspective, Alphabet is a competitor to an OpenAI and Anthropic. It is also a competitor to NVIDIA on the chip side. And that's the advantage they have in terms of allocating more of their capital towards the chip making efforts that others don't have the benefit of.
So, they won't be, they'll have ups, basically. So, so I think it's interesting. I don't know that it really changes things that dramatically. I mean, it's a gigantic company. I know $80 billion is a lot of money, but on the scale of things, as the scale changes every day, seemingly, to me, the takeaway is that Berkshire's there. I hope that it's reminiscent of when Berkshire, remember when they first bought their Apple stake?
Yeah.
That would be great. But on the whole, I'm not quite sure what to make of it yet, but the Berkshire part is to be.
Dude, even the TV analysts, it's a lot of news to digest immediately. It's probably not going to be bearish long-term, obviously, but this is just something we haven't witnessed in the history of the Max 7s.
Biggest.
I mean, we have been talking about all of these companies going to the public debt markets and going around the world to the public debt markets. And here they are finding another way to raise money. I mean, does that signal anything to you that maybe going to the debt markets, they've tapped out on that for at least for the time being?
I think, Google going to the equity market or the debt market anytime in the last 5 years would have been seen as why do they need to do this? Unless they were issuing 100-year paper, which, a couple of these guys did at the lows of yields back during COVID. I mean, it looks genius. It's a $10 billion private placement to Berkshire, which, you'd obviously, again, that shows commitment, that shows long-term. Berkshire's been building this position since late 2025. By the way, great run for them. So yeah, you mentioned it. Google was out there issuing debt-denominated long-term, 10 years. They did this in multiple actually tranches across yen, Swiss franc, you name it. They're diversifying outside the United States. I think the capital markets business for the hyperscalers is alive and well for the foreseeable.
I view it as sort of a positive. I mean, $80 billion on a $4.5 trillion company is, I don't think, it's Karen said, it's insignificant. And the fact that Berkshire's there buying some of it, I think, is important. So the fact that the stock is lower doesn't really make a lot of sense to me. It would not surprise me to see this thing higher at some point over the next 24 hours.
Your take?
I don't really think much about it. I mean, it's a huge company. I don't think they could do it themselves if they had to. I think you're going to look at Berkshire. They're going to try to deploy funds in certain different areas. Greg Abel's got to leave his stamp. I don't really think about it that much. Too big of a company.
I do think, though, we have to remember that these are companies that were all free cash flow generators to the moon. Meta's not net cash anymore. So they're a net debt company. Doesn't mean they're an indebted company. It doesn't mean that they have a tough leverage. In fact, they're fantastic from a credit perspective. But I think that's the question. It gets back to what's the multiple you want to pay for these companies. And people were thinking a very different thing, at least for Meta and Microsoft.
Or I know you want to go back to Karen, but
dude, this is just, I mean, my bias is I agree. This is not bearish at all. 2% of the market cap, who cares? Nokia up after hours. And Berkshire saying, yeah, we're fine at 350 means that, I mean, more investors, if we actually do get to 350, are probably going to be okay with it as well. But it is quite incredible to witness the new era we're in. I think if anything, once again, if the broader cycle of shareholders throughout the next 10 years increases, meaning, in 2020, Robinhood had like a couple million users. By, or I should say 2018, they had a couple million users. By the end of 2021, they had 23 million. Like, that's a lot of liquidity entering into the markets. That's a lot more people caring about stocks. If Google has the capacity to say, hey, 80 billion worth of demand is not that crazy, and there's plenty of people willing to buy our stock because we're freaking Google. And by the way, we're going to grow by using this CapEx. Google should go up, and so should all the companies that are benefiting from the earnings of that CapEx. It might end up being one of the just most incredible bull markets, which will have its up and downs, as it always does. But that long-term trend, the biggest bear case that we talked about last week when we had Chris on the show was CapEx is slowing down, right? The idea that CapEx growth starts to taper. Not that CapEx itself slows down, like the nominal amount of dollars will go up, but the rate of growth will slow down so dramatically that Micron's rate of growth, NVIDIA's rate of growth, all that slows down. I mean, if Google's coming out with stuff like this, and by the way, what's to stop Google from doing this again? If there's enough demand for 80 billion, 5% of the market cap would be another 120 billion. I mean, it's not that crazy. 200 billion, boom, there's their cap. And if they can get rid of 200 billion of shares easily, because at the end of the day, is anyone really going to sell their Google for the next, if you have a 10-year thesis on it, 15-year thesis on it, 20-year thesis on it because of a 200 billion dilution event? Yeah, in the short term, it might sell off a little bit. But if they start growing cloud at 80% and AI overviews get even better, Gemini has 900 million monthly active users, that gets up to a couple billion, like, stock's going to go up. Earnings are going to go up, right? I mean, there will be a lot theorized about this move over the coming weeks, but yeah, Burry 10-page post loading. The Bears are going to have something to say about this. The bear argument is going to be, okay, these guys are running out of money to fund their CapEx. Therefore, they're dumping shares, which is bad because that's diluting shareholders. The punchline that I think the Bears have missed out on all year, we just saw with HPE earnings, is the ROI is coming on the CapEx. Amazon screwed 30%, AWS, Azure's at 40%, Google 63%, Meta's top line 33%. Forget those companies, the NVIDIAs, the Brock, all the other companies are going like. So if the punchline is, well, the CapEx doesn't justify the ROI, but the ROI continues to be there, then what's the punchline? Like, if anything, the Bears are just getting punched in the face from these stock prices continuing to go higher because the earnings growth is legit. So I don't know. I think the bear case is layoffs that are about to come to fund CapEx. I'm happy you said that because Okay, so there is a guy who manages money. Stefano Cap. I don't know who this guy is, but the point is he manages money. I don't know how much money he manages. But he put out an investor letter to his shareholders. Okay. Their fund is down 10.3% in a raging bull market. Okay. So obviously this guy's bearish. Here's what he said. We remain very much on the so far losing side of the biggest stock bubble of our lifetimes, even bigger under most metrics than the dot-com bubble, and it's all AI. We are short various ETFs and individual stocks, including, since early May, the SOX, the highly cyclical semiconductor ETF, which is now priced as if its cyclicality no longer exists. Much of its new chip-selling competition, Alphabet, Amazon, Meta, Samsung, etc., aren't in it and will soon steal its members' market share, which is ironic because Google's about to give them a lot more money with all this capex. Nevertheless, it was up over 23% this month and 90% this year, and the position hurt us badly. We also remain very short SPY, which is bloated with AI companies and loaded with non-AI companies suddenly being treated in prices if they are AI companies. Then here's what he said, which gets me back to your question, your comment about unemployment. Here's his bear case. Okay, 2 reasons. The entire purpose of AI is to replace tens of millions of expensive humans with cheaper computing power. Yet, if those expectations are met, corporate America's revenue losses from the ensuing unemployment depression will overwhelm the employment cost savings even before the inevitable AI taxes that will be imposed. But if those expectations aren't met, trillions of dollars of rapidly depreciating AI capex will have been wasted. So basically, his double bind here is either the big tech companies lay off tons and tons of people to justify the automation of all the capex that they're spending, which is the quote unquote ROI. Or if they don't do that, and so if they do that, then massive layoffs, bad for the economy, right? If they don't do that, then they can't justify the capex. So his argument is either you have to lay off a lot of people and automate them away, which is what fuels up free cash flow, and that's sort of the common bear case around the labor market right now, which is I think why Kevin Warsh is getting ready to cut rates in a couple of years if we see the labor market decline. Or you don't cut all those employees, and then you have to pay for the employees and pay for the compute, and that's not sustainable. Now, this misses another sort of key element right here, which is that what if we have to hire more people because the AI demand is so massive? What if it's not about replacing all these people, as Jensen has been saying, it's about growing so rapidly, so exponentially, that we have so much more demand for more people that people will have jobs, people will have incomes, and companies will have massive free cash flow because of productivity. I mean, that's kind of what the market is pricing in right now. That's what this guy's missing. But that is his bear case. Then he says, yes, past new technologies expanded employment in unforeseen ways, but those older technologies replaced, quote, non-thinking human tasks, while AI is supposed to be as smart or as smarter than other humans. Thus, for tens of millions of jobs, why would a company hire a human versus a cheaper, as smart as a human? I've yet to receive a sensible answer to that simple question. This guy is managing, I don't know how much money. He even said at the end, I will waive the management fee that we take because we're so disgusted and embarrassed by this fund's horrific performance. But his entire bear case is resting on a simple argument around unemployment. I mean, it is quite incredible what professional money managers will do to justify their ego with hundreds of millions, billions, you know, who knows how much money he manages and how short he is in losses. But the point is, when you've come up with a thesis, that thesis, if it's being disproven in real time, you're not able to walk away by just accepting defeat and saying you're wrong as the market disagrees with you, based on this idea that unemployment is the smoking gun. And what it reminds me of is a documentary I watched over the weekend. I highly recommend everyone watching this. I did not know this about Mr. Ray Dalio. I did not know this, but Ray Dalio's ego ultimately led to him not becoming one of the most successful hedge fund managers of all time because he thought we would get an epic collapse, and it didn't happen.
1982, Ray Dalio is riding a wave he believes will never break. He is 33 years old, managing tens of millions of dollars, and he is absolutely certain that the United States economy is about to collapse. He doesn't whisper it, he shouts it. He testifies before Congress and warns of an imminent depression. He appears on the PBS show Wall Street Week. At the time, the most watched financial program in America, looks into the camera and delivers the line that will haunt him for the rest of his career.
I can say with absolute certainty that if you look at the liquidity base in the corporations and the world as a whole, that there's such a reduced level of liquidity that you can't return to an era of stagflation.
You have to understand how extraordinary that was. This wasn't a private memo to clients. This was a young, relatively unknown money manager going on national television and telling America it was doomed. That takes courage or delusion. In Dalio's case, it was both.
Not partially wrong, not early, catastrophically, historically, spectacularly wrong. The recession ends the same month he makes his call. Paul Volcker slashes interest rates. The stock market pivots. An 18-year bull run begins, the longest in American history. Every position Dalio holds turns against him. Clients pull their money. His own savings evaporate. He fires every employee at Bridgewater, every single one. The firm that was supposed to revolutionize risk management is reduced to one man sitting alone in an apartment. He borrows $4,000 from his father. It is the last money the old jazz musician has.
I mean, you're talking about someone that was managing hundreds of millions is left with his last $4,000 that he had to borrow from his dad because his ego got in the way of a 10-year bull run. And he thought, because of whatever theory that he had, which is why I read that letter from that money manager, his theory is about unemployment. I mean, like, who's smart enough to understand in the next 10 years what's going to happen to unemployment? I mean, I could give you a trillion better bear cases than unemployment. There's plenty of ways to make a bear case for this market. But this guy and his ego in managing money in the greatest bull market we've ever seen is based on unemployment. It is why the bears are so frustrated. And it reminds me of what happened to Dalio. Now, Dalio's comeback story was pretty epic. He ended up becoming the world's largest hedge fund manager by 2009 because they called the 2008 crisis. So like he had a really good comeback arc after the 1990s. But the point is, ego can get in the way. And I think the bears that will come out and say this Google news is super bearish, it might not be a well worked out theory if they haven't officially, thought about all the elements of how this ends up playing out. If anyone wants to watch the documentary, link is right there in the chat. A good friend of mine sent it to me over the weekend. And I mean, I was hooked, dude. I didn't even check my phone for 40 minutes. Like I was just like watching it. And that was the part that stuck with me. Like your ego, your thesis, your theory, you can back test it in all the ways you want, but if the market disagrees with you, you have to have a lot of courage to sustain your thesis in the face of the market disagreeing with you. And sometimes it makes sense. Other times, especially when you go so extreme, saying everything's going to collapse, like you put such a big target on yourself where, at the end of the day, it's America. It's one of the greatest countries in the world with the greatest companies in the world. There are ways to help it not collapse. And if that's what the bears are screaming, then that might not always be the way it plays out. Did Trump just tweet? Did he just tweet? Trump just tweeted, I had a conversation with Netanyahu today asking him not to go into a major raid of Beirut. He turned his troops around. Thank you, Bibi. I also had a conversation with representatives of the leaders of Hezbollah, and they agreed to stop shooting at Israel and its soldiers. Likewise, Israel agreed to stop shooting at them. Let's see how long this lasts. Hopefully, it will be for eternity. President Trump. Is the market pumping on that? Market not really moving on that. He tweeted something like this a couple hours ago. This is a new tweet. It is worded differently. But yes, he did tweet something similar to this 4 hours ago. But it's not exactly the same tweet. Bitcoin doesn't care. She's going down below 71,000 on BTC. Wow. What a freaking move after hours with Google. Absolutely incredible. All right, folks, that is it for today. That's what we've got. Speaking of Bitcoin, real quick, we never finished that Tom Lee clip. Let me pull it up. This Google news broke right when Lee was talking. But once again, it continues to continues to be a software and AI driven rally over crypto.
Always happens at the end of crypto winter. You know, if someone asks me, is the thesis for Bitcoin or Ethereum broken? You know, it's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it, really are what's scarce. And you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites. You need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves. And it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory, starting on software. But as people focus downstream into the future, that's really, I think, when the bid comes for Bitcoin and Ethereum.
Because when you talk about stocks, it was so easy for you. You did it, $10 to be able, and there's something.
Yeah. Well, actually, market sentiment plays a huge role, because it's sort of essentially risk premia. But there are two proven ways to value crypto. One, of course, is just network usage, because wallets and activity per wallet still explain, like, even now, 87% of the rise of Bitcoin. So as long as more people use it and they're transacting it, the value of Bitcoin should go up. It's a network effect. And the second is the umbrella value of gold. You know, gold when it hits 5,000, if Bitcoin had the same network value as gold, and gold is not as scarce as Bitcoin, that would put Bitcoin at around 2 million. So to me, I think there's still two ways to look at the value. And of course, for Ethereum, it's been shown for every dollar of tokenized assets, you know, tokenized dollars or others, it's created $1 value for ETH, the coin. So if you believe Wall Street's going to tokenize, Ethereum's price should go up a lot.
Look, the general thesis, I don't think is flawed. The problem is, at the end of the day, that thesis needs to match liquidity. And I mean, we seem to have a ton of liquidity out there, but that liquidity is going to go into SpaceX, going to go into OpenAI, going to go into Anthropic, going into Broadcom and Nokia after hours, going into HPE up 32% after. I mean, just like, why would someone buy crypto right now when you have real earnings growth at reasonable multiples in tech? It's not to dismiss crypto, not to say that crypto is bad. It's not the asset that people care about right now. Having said that, software wasn't the asset that people cared about for the past couple of weeks, and now it's caught a bid. But at the same time, software has, you know, actual earnings, cash flow, stuff you could sort of like model out. Crypto doesn't really have any of that, so it's really more vibes. And when the vibes are so geared towards stocks, and stocks that are putting up really, really good numbers, like, yeah, I think you're going to miss a bit on crypto. I don't think that takes away the long-term thesis of crypto, but it absolutely takes it down in the short term. All right, folks, that's it. That's what we got. What a crazy day after hours. I still don't have the Hive numbers. It's not on their website. I don't know where these numbers are. Stock's up 3%. So I guess whoever saw the numbers likes the numbers. But Google officially dilutes or opens the potential to dilute by 80 billion, 2% of the market cap. Stock's down 2% after hours. Berkshire buys $10 billion worth of Google at $350 in a private placement. And now we see if Microsoft and Amazon and Meta decide that that's going to be the same thing they do. And maybe this puts a premium on Apple, because if Apple's not going to be doing this and they're going to be actually buying back their stock, you know, maybe the street is a little bit more comfortable with Apple in the short term. But as long as the CapEx via dilution helps them grow, you should see the market start to really not care about the dilution. And that's going to be something that we see over the coming months. All right, that's what we got. Crazy, crazy, crazy day. Absolutely crazy, dude. I did not expect that type of news, but we'll talk about it a lot more tomorrow. We don't have massive earnings in the morning tomorrow. We do have after hours Palo Alto, GitLab, and Ulta. I will not be live, unfortunately, for CrowdStrike and Broadcom. I wish I was. I will not be here Wednesday, but we will talk about those on Thursday, and hopefully they put up some good numbers as well. All right, that's it for me. Thank you, everybody. Appreciate everyone joining every single day, and we will be back for the market open tomorrow. Thank you, everybody. Have a good one. See you guys tomorrow morning. Bye, everybody.